Now there are 5 very embarrassing mistakes that I have made in my first year of trading, and these are mistakes that I don't want you to make. We are going to talk about that today, coming up next. So as you already know, in my first year of trading, I blew a lot of accounts. I made a lot of very embarrassing mistakes. I made some good trades which I think was good, but actually it turned out that they are really shitty trades. So time and time again, I also find that a lot of other traders in their first few years of trading, they also make these mistakes. Just understand that you're not alone, okay? So the first mistake that I made when I first started out trading is that, now this is also very common among beginner stock investors, is that they buy and sell just based on price. Now what do I mean by that? So personally, I'm a stock investor. I don't trade stocks. Although I know a lot of people who do that successfully. So I find that a lot of stock investors, when they see that the price of the stock is very cheap, they'll just buy based on that. In other words, they'll just buy based on what they see right now at this moment. Now what is wrong with this way of investing is that when you buy when the stock is cheap, thinking that it's going to go up, that's not the right way to invest. Because here's the thing, sometimes when a stock price is cheap, it is cheap for a reason, especially when it comes to penny stocks and not valid companies. A cheaper stock can also go cheaper, and also a lot of people just pick companies that they like, just like that. And also a lot of people, when they see a stock price is very high, they'd be like, okay, it's overvalued, let me just sell it. In other words, they're still buying and selling based on what they see on the charts. When it comes to investing in stocks, long term, you need to compare it with the intrinsic value. And you can calculate that by projecting the cash flow from the current year to future years. So that's for another video. And when it comes to Forex, last time when I see an uptrend, I'll just buy. Just like that. Last time when I see a downtrend, I just sell. Without taking into account that the market momentum has already been exhausted at the time when I bought it, at the time when I sold it. So very often times when I sell in a downtrend, I didn't take account of the fact that markets can reverse from a downtrend back to an uptrend. Then I made a lot of stupid trades, meaning that I trade blindly. And when I buy and sell at that point of time, I also don't know where to set my stop loss. In other words, my TP target and stop loss targets is just very random. And one of the reasons is also because I wasn't confident in my system back then. I did not backtest enough. I did not practice it enough in the demo account. So speaking of demo account, in my first 3 months, I also rushed the whole entire process. After 1 to 2 months of trading demo, I'd be like, it's time to go live. Then only to get burned, only to blow a few accounts. That's why I went back to demo trading for 2 years. Traded demo for 2 years before I go back to live again. Second mistake that I made is that I focused too much on, can you guess what is it? This thing. What's this? Percentage win rate. So when I first started off, I think that I was killing it when I can make 10 straight wins, 20 straight wins. At one point of time, I even achieved 30 straight wins, 40 straight wins. So how do I do that? If you have watched some of my past videos, when you make a buy right here today, last time what I'll do is that I will set my TP target very tight. Alright, then my stop loss, I will set it as wide as possible. In fact, there was one point of time I would set my TP target at 20-30 pips and then stop loss target at more than 100 pips. Can you believe that? That's worse than being a gambler. You know what I'm saying? In other words, I have a very bad risk to reward ratio because my main focus back then is just how can I get the highest win rate. And on that day when I make a losing trade, what happens is that the price did not go up and hit my TP target. And then it starts to retrace from here. Then I'm like, okay, it's gonna go up soon, soon. Yeah, soon. Don't know when, but soon. Speaking of stop loss comes the third mistake. So when I see the price go all the way down and down and down, when it reaches very near to my stop loss, what I'll do is that, okay, I can't let my 3 to 4 months hard work get wiped out just like that. So let me just do one thing, okay? I drag my stop loss further downwards so that I can let the price to breathe. But turns out that the price went further down and down and down and down, and then it becomes so tiring to constantly adjust my stop loss that I completely removed it. So I removed my stop loss, then the price, instead of going up, it went further down. Then I get a margin call, then my trading account gone just like that. So in other words, my third mistake is that I constantly adjust, or even sometimes remove my stop loss. Now, I was very disciplined with my TP target, but I was super not disciplined with my stop loss. And I was doing this because I was operating out of the fear of losing. I don't want to lose. It is better to admit that you're wrong right now than to prove to the market that you are right. In other words, respect Mr. Market, have less ego. The fourth mistake that I made, I really like to take trades on non-trading days. When there are no signals for my trading system, on that day, I will still trade. So how do I trade? I force a trade. A lot of traders, they can't handle those days when they are not trading. Karen, I'm a trader, I'm not a plant. That's why a lot of traders, they go into scalping. A lot of traders on non-trading days, when there's no signals, they get bored. Now here's the thing, it is normal, especially if you're a day trader, swing trader, position trader, to have no trades on some days. Certain systems work on a ranging market, certain systems work on a trending market. If your system, for example, only works in a trending market, you need to avoid trading on those days where the market is in consolidation. If you apply your trend trading system onto a ranging market, you're gonna lose big time. Again, remember there's no such thing as a one-size-fits-all system. And also you need to remember that sometimes the best trades that you make are those that you did not make. So if you don't know what to do with yourself on a non-trading day, go watch my video where I give you tips on what to do during non-trading days so that you can better prepare for yourself on those days when you have a trade. What I did back then on non-trading days is that I'll just sit in front of the computer and just stare at the charts. Then there's always this voice in my head that be like, come on Trent, just this one time, it's going to work out. Now if you open a trade every single time when the voice inside your head tells you it is going to work out this time, guess what? The next time when you're bored again, you're gonna listen to that stupid voice. Just make a buy sell, it's not gonna hurt anybody. It's not gonna hurt anybody, how about you hard-earned money? Then the whole entire cycle continues. I made a trade on non-trading days and then it didn't work out. Oh yeah, I wonder why it didn't work out, man. Then I go into the trade again, I take a revenge. You took my money away, I want it back. It's like an emotional roller coaster. It's worse than the theme park. On some days I want to kiss the computer, on some days I want to burn it. So in other words, back then, I loved breaking my trading plan. It's like my trader's morning, afternoon, nighttime routine. I would look at my trading plan and then I'd be like, yeah, I hear what you're saying. But you know what? Today is my day, even though I don't know what I'm doing. Speaking of breaking my trading plan, that's another event where I just love breaking my trading plan. You know that I don't scalp, but you might know that I used to scalp. It was during my first year of trading. Because you know what? Scalping is very exciting, number one. Number two, I can make a lot of trades a day. Number three, very seldom there are non-trading days for a scalper. You can be busy for the whole entire day. It feels like you're making progress. Now here's the thing. If scalping works for you, then keep doing that. Because I know a lot of successful scalpers, institutions also do it, but very often time, these are professionals who have many years of experience or retail traders who have many years of experience, but never ever do it when you're a beginner stage, okay? Because this was what I did. My next mistake is that I love breaking my plan when there's a high impact news, because here's the thing, when you see, for example, NFP, the price going up and down, you know this feeling where you feel like you're missing out, where your friends ask you out for party and then you'll be like, no, I need to stay home and work. Oh my god, everybody is making money except for me. When I scalped back then, it was really stupid. It's like I make a buy and sell at the same time. Sometimes I make many buy trades, buy here, then the price goes up again, buy again, price goes up. Then many buy orders. How much lot size am I trading in each trade? No idea. My life was a big question mark. And also here's the thing, when you apply your trading system right into a high impact news, your trading system is going to be rendered useless, completely useless. So very often times when I break my trading plan, I would make a buy, randomly set my stop loss, the price will come down, hit my stop loss, and then go all the way back up. And then I'd be like, why even set a stop loss? Only to receive a call from my broker in the middle of the night, Karen, your account is not doing so well. I'm like, why? Then my broker is like, do you even manage your risk? So in other words, there's no risk management strategy. All I care about, where do I buy and where do I take my profits? Don't tell me nothing about stop loss, lot size, calculation. I'm not here to study maths, I'm here to make money. So these are some of the mistakes that I learned the hard way. And of course, there are a lot more mistakes that I made, which are also very embarrassing. But you know, guess what? When you make stupid mistakes, when you make dumb, idiotic mistakes in the first year, second year of trading, it's okay. Because here's the thing, a lot of people, they make stupid mistakes, they blow some accounts and then they give up. they give up. The only difference between me and them is not that I'm smarter, it's just that when I make stupid mistakes, I write it down and then put it one side, but then after that I take it back, then I learn from it. It's okay to make mistakes as long as you learn from it. It's okay to blow a few accounts in the first few years as long as it's not your grandmother's life savings. Okay, so with that, let me know down in the comment section below. What are some of the mistakes that you learned the hard way when you first started out in trading? Okay, so with that, I'm Careful and I'll talk to you in the next episode. Bye.